Let's run through some calls of the day. ServiceTitan, big upgrade today at Morgan Stanley to overweight from equal weight, named a top pick. The target bumped to 131. It was 125. They see ServiceTitan as an undervalued leader in vertical software with strong growth potential and margin expansion. Josh Brown, you own the stock, which is down about 16% or so in a week.
Yeah, I haven't started to add to it yet, but I will be. I love this call, and I love the opportunity that's been created in this across-the-board software sell-off, because they've knocked down stocks like this that have literally nothing to do with the challenge from AI. The customer base of ServiceTitan are the people who are digging your pools and doing your driveway and raking your leaves and any kind of service industry professionals that you can imagine. Large companies, small companies, private equity backed, mom and pop, you name it. What all of them have in common is two things. Number one, they absolutely need to modernize their billing, their appointment scheduling, et cetera, in order to compete in the modern era. And number two, I promise you this, none of them are going to sit around vibe coding an app to replace what they're buying from ServiceTitan. It is just not a real threat. So this name got pulled down by people who are across the board selling software stocks. It's in all these baskets. The selling has literally no meaning. They have done nothing but outshine expectations since coming public. And I do think there are a whole bunch of stocks just like this that will be opportunities once the dust settles.
You got some nice calls today, too, on Shack and Toast. Both were
Yeah, it's
upgraded.
like my birthday.
Yeah, that's right. Morgan Stanley ups Shack to overweight. 125 is where they put the target. Toast got upped at Evercore. Their price target there is 40.
Yeah, let's take those backwards. Toast is a category killer. They now have the biggest market share. I think it's 140,000 restaurants on their platform. People understand the handheld device is a Trojan horse just to get into the restaurant. And yes, of course, they are being paid every time somebody pays a check at a restaurant. But what's more important is once they're in there, they spread out horizontally, get their tentacles into everything. They're involved in the food ordering system that the chef uses. They're involved in the payroll software system that the owner of the place is using, and anything else you could think of. Again, very similar to ServiceTitan. Restaurant owners are not vibe coding their own apps. This is not at risk of AI disruption, never going to happen. Instead, it is the dominant platform, will remain dominant, and will continue to build both enterprise customers and locations. So I think it's a stupid sell-off, and I'm remaining long. On Shack, look, this is a very different type of situation. It's not software related. I just think it's a misunderstood growth story. I know Belsky's in the name as well, so I'll cede my time to him.
Okay, thank you. So you want to give me something quick there? And by the way, Delta's target, which you also own, was raised today as we wait for United. Their earnings are coming, I think, in overtime tonight or in the next 24 hours.
We'll start with Shack. I just think, Josh talked about category killer and Toast. I think Shack's a category killer in the consumer discretionary / restaurant business in small mid cap. I do believe that for over a near-term basis, it's a bit of a broken growth story because people are worried about that they're growing too fast. We actually like their growth trajectory and how they've managed that. With respect to Delta, Delta's the best in brand, best airline in the world. Amazingly managed, operationally fantastic in terms of, you look at ROE and ROA on that company, amazing. And so the way that they've managed their fleet and how they've expanded it and invested in it, Delta's the one they own.
What's ROA?
Return on assets.
Okay. You think everybody just knows that?
I don't. They could. I mean, they could. They're very astute. Return on equity.
What's ROI?
Return on investment. You talked about it earlier. Now, how about a return on invested capital? What about dividend yield? Now, the people that watch this show are educated. They're smart.
Yeah, well,
let's go.
All right. TKO Group, 233 from 227, outperform at Wolf. You got that.
This is a name in the communication services sector that gives you the type of growth that you used to only be able to find from names like Alphabet and from Netflix. Unfortunately, the stock has pulled back here to the very supportive moving averages. Why? Because recent earnings report the comps on UFC were really hard. It is a buying opportunity. Look into 2026. This is a free cash flow machine, deals with ESPN, deals with Paramount, WWE, UFC, live sports programming, only accelerates into 26, and sponsorships, which is 10% of their business, is expected to grow 65% in 26. I think you buy the name.